Hey, in today's video, we're going over the smart money list. Is all money the same money, or is some money better than others? We recently did a webinar about this, and this is just a snippet from that webinar, going over the smart money list. I'm Mel Stubbs. Stick around. Is all money the same money? Let's say you have $100,000 in several different accounts. Is it truly worth $100,000 in all accounts, or are some accounts better? Well, step number one, free money. This free money, that's your 5% match. If you're going to, hey, I want to invest some money, where should I put it first? Typically, first is at least put the 5% in TSP because it's free money. You're doubling your money. You got to do that. But there's, inheritances, family gifts. Just free money. Awesome. If you're able to get it, you should get it. So number two is generally tax-free money. And so we're going to be talking about Roth TSP, Roth IRA. Now you can set up some cash value of life insurances and set it up properly to kind of create some tax-free money. Even the municipal bonds, lots of times, hey, it's tax-free to the municipal, but it might be federally taxed. And some of those like tax-free bonds, are they 100% tax-free all around? Lots of times they are not. So for this, we're going to be talking about Roth TSP or Roth IRA. If you have money here, it is not taxed again. The reason why we have to say generally not taxed again, remember the two rules. You got to wait till 59.5 or over to touch the gains, and you got to have the Roth IRA for 5 years. If you meet both of those, then it's not taxed again. Number three here, tax deferred. This is your traditional TSP, your traditional IRA. This is the paycheck that you said, like, hey, don't give me my paycheck. I want to put it in the TSP. And so you put it in, you didn't pay taxes yet. It's growing. Hopefully it's growing a lot. But whenever you touch it, it's your paycheck. So it is 100% taxable at your tax bracket. And then, of course, taxable money. Just taxable income, W-2, that type stuff. Taxable interest. If you got a bank, savings account, CD, stuff like that, the interest you earn there is taxed at your tax bracket. Rental income. And then even we can go so far as, like, let's say you have just an investment account. I've got a Vanguard account that's got some stocks or bonds or whatever. You got to pay capital gains on that. So if we look back here, we've got tax-free, we've got tax-deferred, we've got taxable. If you have $100,000 of taxable money, you need to look back to say, like, how much of it's yours? You'll have to look back to go, well, what did I buy it for? And what am I getting ready to sell it for? And do I have any profit there? If you have some profit and it's within 1 year, it's short-term capital gains, and that's taxed at your tax bracket. So maybe you're in the 22% bracket or the 24% bracket, but whatever the gains are, you're taxed at that rate. If you, this is long-term gains. Let's say I bought it, it's gone up, I got a profit, but I've held it for longer than a year. Well, now you have to do capital gain, like long-term capital gains, which is either going to be 15% or 20. So you have 0, 15, or 20, depending on your income. But the biggest thing here is capital gains. The rate, it's better than the tax bracket rate. So you're either going to be paying your tax bracket rate or capital gains, which is a little bit less. But whatever it is, it's taxable. So if you have $100,000 there, is all $100,000 yours? Well, maybe not. You got to look to see how much is the gain, figure out the taxation, but probably it's not all yours. Something will be coming out for taxes. So if you got $100,000, you actually have a little bit less than that, depending on what the tax amount is. If you look at the tax deferred TSP, if you're looking and say, hey, I got a $100,000 TSP, how much of it's truly mine? We need to figure out what tax bracket you're going to be in when you take distributions, because it will be 100% taxed at your tax bracket. So if you're in the 22% Fed, you don't have $100,000. You got $78,000 because $22,000 is going to the IRS at some point. If you have state income taxes, then it's not just the 22% going to the feds, you've got some state going. So definitely here, if you have a $100,000 balance, you don't have $100,000. It is something less due to taxes. Now, if we go over to Roth, the tax-free, if you have a $100,000 Roth IRA and you're over 59.5 and you've had the account for 5 years, then you have $100,000. You can access it, you can spend it, and you pay no taxes. So $100,000 in all three of those accounts are not the same. Some of it's better than others. So generally speaking, some of the planning that we help people with and we think is wise is if all buckets are not the same, then it makes a difference where you store your money. You can't just willy-nilly save it wherever if we can agree that they're not the same. So do you need some taxable money? Yes. Generally speaking, that's where the people's emergency fund is, or I need 6 months of expenses, whatever. You need some. Do you need a bunch of money there? Well, we talked about that, that's not the best tax-wise place to hold the money. So you need some. If it gets too high, maybe there's some planning and shifting that you can do. Well, how much is too high? Well, every situation is different. Definitely, if this is important to you, reach out to us below this video, fill out your information. We'd love to talk to you about it. Let's say all of your money is in the tax deferred. Is that wise? Well, if all 3 buckets are not exactly the same, then you've got to decide what's the best bucket. How do I get it there? I think on the surface, at least, we'd agree that tax-free money is better. I mean, if I'm going to inherit some money, do I want to inherit traditional IRA that's taxable or tax-free Roth? I'd rather inherit the tax-free Roth. If it's all the same, I'd rather have the Roth. So for a lot of times, it has some benefits. And so shifting money that direction can be, wise planning. Now, how do you get it there? How much do you do? How quickly do you do? Well, that's all some of the planning stuff where you can do this wrong and actually pay more taxes than you should. But you can do it right and save a lot in taxes. So it's the implementation of the strategy. First, it's understanding the strategy. All 3 buckets are not the same. Maybe I should start directing money a certain way. I think, personally, good strategy. How you implement it, that will depend. What's your tax bracket? What's your income? How much money do you have in the different places? How many years do we have to be shifting? All of those play into exactly how do you implement the strategy. But the overarching strategy is there's 3 buckets. They're not all the same. And so, shifting money a certain direction can be wise. You're going to want to talk to somebody, a tax professional, financial advisor, whoever, to help you figure out what's best for you. That is something that we help clients with, and I think it's very valuable. Hey, I hope you enjoyed the information on the Smart Money List. If you realize that maybe you should have more Roth, is it too late for you? Check out this video right here. Is it too late to start Roth TSP? If you want to sign up for a federal retirement webinar, go to christycapital.com/webinar. My name's Mel Stubbs. See you next time.